What's up, guys? So, here's a quick one on how I got my setup on BTC-USD, and I'm dropping a quick top-down analysis. You understand on how I did it. You understand. So, welcome to my YouTube channel. My name is Rexy, and I'm the CEO of Alt Pulse. If you don't know, there's a link to my group and platform where you can join traders in trading my signals, futures and sports. So let me jump right into it. I don't want to waste your time. So checking on the monthly time frame, you can see what BTC is doing. BTC is quite bullish. It just broke a resistance. It broke above a resistance, and immediately after that, on the monthly time frame, it started correcting. When there's a correction in any market, that is a sign for another impulsive move, because what that means, it's just like using a catapult. You understand? There's an original state, and there's a state where you are dragging it back, and then there's a state where you just let it go for the impulsive move. So that's how it works. So we can see this correction here. So we have to utilize the time frames, because I see a lot of traders, they just analyze the market. A lot of newbies, especially, you analyze the market on one time frame and that's it, you're ready to trade. No, it doesn't work like that. So to the weekly time frame, so we can see clearly that what's forming here is actually a chart pattern. It's more like it's a descending chart pattern, which is more like it's giving a flag-like pattern. But if I have to use Elliott wave on this, we are going to use the ABCDE, or ABCDE. You understand? So it's but there's something I want you to note from this pattern. There's something called the power of three, which is while you're analyzing the market, you need to look out for manipulations, because the market is controlled by the market makers, the makers, the people that make the big moves, the industrial move, the banks. You understand? Those are the people that control the market, because they have larger funds, and it is the larger funds that control the market. So what you need to know is, these guys, the market is programmed in an algorithm in such a way that it is meant to take out retail stops, before it makes its big moves. You understand? So only few traders understand this. So you need to look out for stops. You understand? Whenever you see random stops, after corrections like this, random stop hits or like manipulation. Let me just use the word manipulation. You understand? It could signify that the market is about to make a potential strong bullish move. You understand? Right here we have like a demand zone. It's actually a demand zone. So it's a level where we have strong buyers. So the market made a manipulative move, and took out probably a lot of traders stops here. A lot of buyers that bought around this level, because after this retracement, minor retracement, some buyers must have bought around this level and put their stop loss below here, and it took out this stop loss and went back up with a very strong momentum, and after that made a retracement, and probably is looking for a way up to break out of this chart pattern and probably retest and made the bigger move. And this big move could even extend to like 90k or 100k even though. So let's go to our daily time frame. What do we have on a daily time frame? So now on the daily time frame, what we are looking for is continuation structures, change of structures, change of market structures and all. So what we have currently is, okay, we can see that the market broke an anchor here while making the manipulative move, but ever since then it has not broken above the previous high to change the structure, so which makes it relatively bullish. But on the bigger time frame, this is going to be like a sniper entry for buyers. You understand? But since we've not gotten like a clear break of structure on the bigger time frame, we cannot use the smaller time frame, except it's still quite risky to make an entry for that big move, that 90k move. So what we can do is like scalp within our 1 hour, 15 minutes, 30 minutes, make short moves. But we know that markets currently at the moment is making strong bullish moves. Like we can see the bullish candles here, very strong bullish candles. So right now we see price broke above this level, maintaining a strong momentum of bullish movement, bullish sentiment. Now broke below the previous low, changing structure. So it's more like correcting within this place, more like choppy, which makes it even, less likely to be a good area of entry for that 90k move. You understand? So what we can do is, scale down to the 4-hour time frame to see proper change of structure if we are willing to trade within this small time frame. So now we can see that market was like ranging downwards in a pattern like movement and broke above it, retested, and made a move upwards. Ever since then it has been bullish, and we're expecting that bullish move to last to this strong level of resistance here. You understand? So because like I said, it's quite risky for us to make any sniper move here and hope to carry that move to 90k. Is quite risky. So what we can do is make that move on a smaller time frame with a smaller target. You understand? Reduce the target, because one thing that kills most traders is holding on to larger targets just because you want a lot of profits. And that's where you find a lot of traders being in profit for a while, and then they'll say, okay, all my profits are gone after seeing maybe $50 profit, for example, and then you lost all your profit and even lost your account, especially newbie traders. You understand? So right now we can see a much realistic target. It's very good. In trading, you have to set realistic goals. If not, you will not accomplish anything. So now, right now, we can see price break above the structure, a new structure on the 4-hour time frame, which is signifying that the market is still bullish towards. On that 4-hour time frame, the market is still strongly bullish. So now we can, trade like a retracement of this. We have our Fibonacci retracement. This would give us probably 50 or maybe 50 or 618 level, and which is what we have. We have 50%, which means the market has retraced 50% of the previous move, giving it in a more a solid reason, and even more solid reason for us to make this move after the break of this. For those that missed out on the break of this structure and the retest for the bullish move, so this is a better move, a better entry. So now what we can do here is make our entry at this level. You understand? But for us that like to be like we like entries with very low risk, because this is 4-hour time frame. If you are entering with a $10 account, you can do damage. You can do some serious damage to your account. So you can go to the 1-hour time frame to reduce risk. So what we have on the 1-hour time frame, or even 30 minutes time frame, now you can get something like this. So this is why this is why top-down analysis it's very good to be methodical when it comes to top-down analysis. You have to be meticulous. You have to take every step with cautious practice. So what you can do now is see this pattern forming. You can tell that, okay, no, like I said, it is a correction, and every correction means an impulsive move ahead. You can see how strong these bullish moves are. It is already telling you that market is strongly bullish, and compared to what's happening on the other side. So you can tell that the market is strongly bullish. So now a breakout of this correction, a retest, could be like a sniper, a very good entry, and a stop loss below it, and then back to the top, and you're good. So that's just how I took my setup for Bitcoin, and here we go back to 64K.